Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we focus on February 2025 inflation numbers and expectations. Last week, the National Bureau of Statistics, NBS, published the Consumer Price Index (CPI) report for February 2025. The CPI gauges inflation by reflecting changes in the prices of goods and services that people commonly use. We can gain important insights into economic trends and the overall cost of living by systematically tracking these price fluctuations over time. The CPI is computed monthly, and inflation is reported in two main ways: comparing the prices of goods and services in February 2025 with February 2024, which is year on year, and February 2025 with January 2025, which is month on month. According to the report, Nigeria's headline inflation declined by 1.3 percentage points to 23.18% year-on-year in February 2025, relative to 24.48% year-on-year in January 2025. On a month-on-month basis, headline inflation in Nigeria moderated significantly to 2.04% month-on-month in February 2025 compared to 10.7% month-on-month in January 2025. Food inflation, a critical component of the CPI basket, was 23.5% in February 2025 compared to 26.08% year-on-year in January 2025. This moderation can be attributed to a decline in average prices of food items like yam tubers, potatoes, and soya beans. In addition, the decline in cost of imported food items due to appreciation of naira supported the decline in food inflation. Core inflation, which excludes agricultural products and energy items, increased to 23.01% in February 2025, up from 22.6% year-on-year in the previous month. This slight rise can be attributed to the increase in the information and communication subindex resulting from the recent tariff adjustments by telecommunications providers. This month's noticeable increase in inflation rate aligns with several key factors. 1. The high base effect due to the rebasing of the inflation rate. 2. Significant drop in petrol prices. Dangote Refinery cut petrol prices by 9.34% to 815 naira per litre, which directly lowered transportation and logistic costs. 3. In February, the naira strengthened by 8% to 1,500 naira per dollar in the parallel market. However, by month end, it depreciated by 1.48% to 1,500 naira 15 kobo per dollar in the official window. Expectations. In March 2025, we anticipate a further moderation in inflation driven by factors such as the relative stability of the naira and a decrease in the price of premium motor spirits (PMS) from 890 naira per litre to 825 naira per litre. This reduction is expected to lower transportation costs, contributing to a decline in the overall inflation rate. Additionally, if the inflation trend persists, it may prompt the Central Bank of Nigeria's Monetary Policy Committee to consider implementing a rate cut, which would lower lending rates and enhance company profit margins in the medium term. However, food inflation remains the significant concern, primarily due to the ongoing insecurity in food-producing regions. Investment outlook. The inflation rate of 23.18% year-on-year in February 2025 suggests that investors may benefit from enhanced positive real returns, especially in comparison to the decreasing fixed income yields, which are anticipated to drop further in 2025. Maintaining a diversified investment portfolio is essential for achieving financial stability and seizing growth opportunities. Incorporating dollar-denominated assets is a wise strategy to protect against the risk of naira depreciation, which is a recurring challenge in Nigeria's economic environment. Investors should also explore high-yield, naira-based fixed income instruments such as treasury bills and reputable commercial papers, as they provide a favorable balance of attractive returns with lower risk. Furthermore, directing funds towards resilient Nigerian stocks that exhibit strong performance and steady dividends can improve returns. This diversified strategy delivers both protection and potential for growth amidst changing economic conditions. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.